Welcome back. President Trump hosting a major rally in a deep blue city as part of the final sprint toward the election. 28 days away. Shulker with all the details. This is a biggie.
Guess where he's coming, everybody? Former President Trump planning a major rally right here in the Big Apple. Trump reportedly has booked Madison Square Garden later this month. Set to take place on October 27th, just 9 days before the election. It's going to be first come, first serve. You know, there's going to be a line. So the garden seats 19,500 people. They're likely going to need every seat and more. Last month, 16,000 attended his Long Island rally. 10,000 came to his Bronx rally over the summer. Last weekend, 24,000 people showed up for his return to Butler, Pennsylvania, where he was. These crowds, Maria, people are going to be waiting and waiting, and they're not going to get in. We've seen this at every rally. You're right. Absolutely. Real quick, I want to give you an update here on TikTok. They're being sued by New York State Attorney General Letitia James. She accused the social media platform of poisoning kids' minds with the algorithm, in particular when it comes to viral challenges where young people have died or been injured. The explosive lawsuit also alleging kids are feeling more sad, anxious, and depressed because of TikTok's addictive features. 14 other states, Maria, have also sued TikTok. A couple of quick headlines. Back over to you, madam.
All right, Cheryl. Thank you so much. Meanwhile, we're looking at Chinese stocks overnight tumbling, seeing the biggest drop in more than 4 years. Investors fearing that Beijing's stimulus efforts will not be enough to revive growth. Of course, when the stimulus first happened, hedge fund managers loaded up on Chinese stocks. The fall overnight coming a day after China's National Development and Reform Commission said, quote, it's fully confident it will achieve its full-year growth target and will further support growth, but it held back from introducing stronger measures in terms of stimulus to boost the economy. The World Bank also warning yesterday that it expects China's economic growth rate to decline further in 2025, despite a temporary boost from its recent surprise stimulus. Joining me now is the former president of the World Bank, Purdue University Distinguished Fellow, and Wall Street Journal contributor, David Malpass. David, great to see you.
Hi, Maria.
Thank you so much for being here. What did you make of that big China stimulus?
They got everyone excited by saying they were going to do stimulus, and then they put boundaries on it. But it's simple.
What a surprise!
What a surprise! So it pulled the rug out from the equity buyers. But the message to me is the central plan is intact. They're controlling what's done, and they aren't going to go in a market direction. So that gives them this slowdown that they're suffering right now.
Yeah, Chinese stocks slump amid stimulus skepticism. Weak holiday data is how Bloomberg titled what's going on there. But look, investors have to understand that when they're buying these companies, especially those Chinese stocks traded on our exchanges, they're funding the adversary. They're funding the expansion of the Communist Party, no?
Right, and that has to be diversified. People have to rethink that model. A key part of all of this is the U.S. is the biggest economy, and growth here is the most important. So I did see VP Harris talking about supporting the Biden record on the economy. I was surprised by that. I thought there was an opening for her to say, of course, we would like to have more growth, less inflation in the U.S., and regulation that actually worked to allow small business. She didn't say any of that. It was just a buy into what Biden's done.
Well, do we have that soundbite? Vice President Kamala Harris saying she's not going to change a thing? Because you're right. This issue came up on The View. And, you know, one of the ladies on The View said, would you change anything? Do we have that? No, we don't have that. Okay, so she answers, she says, no, nothing comes to mind. I wouldn't change it. I mean, knowing that inflation went to 40-year highs, knowing that we have a wide open border and terrorists have been encountered, to say I wouldn't change a thing?
I'd go also with Afghanistan. If you did a redo, you wouldn't close the base before you defended Afghanistan. And that led straight into some of the wars that we're having right now. U.S. weakness is on full display. So at a minimum, she could have said, I'm going to have a strong country. She didn't say that either.
One of the impacts of this geopolitical unrest and Mideast violence spiking is an impact on oil. So let's take a look at the price of oil this morning, because it is pulling back after plunging better than 4% yesterday on a possible Hezbollah-Israeli ceasefire. Markets are cautious ahead of the retaliation coming from Israel onto Iran's oil infrastructure. David, what are your thoughts with crude now at $73.55 a barrel?
the headline this morning was that the U.S. is mad that Israel's not telling them what they're going to attack in Iran. So it just exuded weakness. So oil's got to say, boy, we really don't know what's going on, and Iran is still on the attack. So that's what I take from it. A different message from the U.S. would be we're going to be supplying world energy markets. That's also not the message. The U.S. has the capability just in the U.S. to be lifting the whole world, and it's not happening.
Well, this is a great point that you're making, and you would like to believe that we have some wiggle room, but there's actually no wiggle room because they have gutted the SPR, Strategic Oil Reserve, haven't they?
That's right. The SPR they used up. It was an election year, I think, in 2022.
Unbelievable.
But we also have, the need for specificity. I saw Bostic's comments and Jamie Dimon's comments yesterday. They were contrast. Bostic is saying the Fed should be trying to do both the unemployment rate and the inflation rate for the country. That's too big a model. What the Fed can do is defend the dollar, and it can help with the production, the output of the U.S. by talking about it, talking about the supply side. And on Jamie Dimon's side, he gave a list of really good points that would enable capital markets in the U.S. We're this superpower in the world in financial markets, and he pointed out you need to allow mid-sized banks to merge. The government is, scrutinizing that it becomes impossible. He made the point that you need to allow public listings and encourage them. We've got this big growth in private credit and private equity. It would be better to have quite a bit of that done by the banking system, but it's blocked by the regulatory controls that are on.
Well, you make a great point, and Jamie made a good point as well. All of this regulation is hampering growth. All of this regulation is stopping big investors from actually putting new money to work and investing. I know you spoke at the Citadel Securities Global Macro Conference yesterday in New York on these geopolitical issues, and Citadel CEO Ken Griffin is going to speak at that conference later today. Did you make these points? What are your takeaways from where we are in the macro story today?
There was a key conversation on the uncertainty being put out by the U.S. in terms of regulatory policy, in terms of strength or weakness, because that's what the world is looking at so much. A key part, and I think Jamie Dimon was raising this, is you have to have capital going to private sector businesses in an efficient way. And with the government's fiscal deficit out, this is a gigantic spending surge by the U.S. government. That just blocks the growth that we need. China feels it, the whole world feels it, and it'd be better for the world to have faster growth out of the U.S.
Of course. David, great to get your insights. Thank you.
Thank you.
David Malpass here in the studio. Stay with us. We'll be right back.